Hi everyone, this is Rob Roy of Elliott Options, and welcome to this trade review of our recently closed trade ID number 199 on the SPY in the volatility strategy. If you've been watching these recordings, you know that normally in the volatility strategy, we're doing strangles based on triangular formations. But when you have a VIX above 50, even doing an out of the money strangle the way we do them is a bit expensive. So we look for other types of strategies to utilize within the portfolio. And in this case, we looked at a long call spread. Certainly the market has been quite volatile, so a spread makes sense over straight calls. And you can see we were in the trade just 7 days with right under a 20% gain. The particulars of the trade on the entry can see the chart that we were sitting down here on the 161.8% fib extension. Now 100% is the extension that you're looking for on a wave C. So 161.8% is what's known as an extended wave C. So we're getting down to the point where you're starting to look for a snapback. And when we look at the 10-day moving average, remember the rule, no security in any time frame gets very far away from the 10-day moving average. So we're oversold short term. So it made sense to go ahead, put on something to catch a bit of a move. Well, right after we put it on, we did have another down day, as you'll be able to see on the chart, but then we recovered. Now, another rule is anytime you break a major point of support or resistance, you need a second day. You need a follow through or confirmation day. Otherwise, it can be a head fake. In this case, it was a head fake. We gapped back up to the upside, and then we followed through with another volatile day, and we're back above the 10-day moving average, and this is where the S&P was when we sent out the alert to go ahead and close the position. It's difficult if you trade options when this kind of volatility doesn't seem like it should be hard, but the way the options are priced, it becomes challenging. So if you can get 20% in a week, really based on 2 volatile days, you want to go ahead and take that. And then if we look at the chart of where the S&P finished, you can see that we finished the closing price with a little notch there was well off of the highs. So when we closed it out, we actually hit the high of the day. Now, nobody hits the highs or the lows dead on a consistent basis, but it sure feels good when you get one right, and we happen to on this one. So our report card so far in this craziness of the market is that we've had 4 profitable positions over both our portfolios on the S&P, and then 1 loser. So 4 winners, 1 loser. That's pretty darn good with what's going on in the market. So we feel good about that. Hope you found this informative. Look forward to talking to you again next time. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.